Today, we will talk about a major Bitcoin indicator suggesting that we are in the middle of the bull market and that a huge major pump for Bitcoin is going to happen most probably in the short to mid term. We will take something very easy and simple as the 200-day moving average. You can see it here in yellow. We will add something important to it, and that will give us a clear indication how to spot a bottom, how to spot the bull market confirmation, and now very important, how to spot temporary highs, where the price might correct to, and how to spot where the bull market is going to happen. We will spot all of these important points and also future points of interest with that indicator. So if you think that sounds interesting, guys, make sure you take a seat, make sure you smash up the like button. And that being said, welcome crypto friends and welcome back to MMCrypto. My name is Chris. And as always, guys, today we are really pumped to go straight into the content. So let's get started. And first of all, for all German viewers, we have a German channel. If you want to see that exact German video in German language, go to mmcrypto.de, also link in the description, and you can see it. Smash up the like button. It's a very new channel, and also smash it up for this video here. So thank you so much. Let's go straight into the content. Before we do so, very important, many people ask us, we said that a few times already, we are trading on BitMEX, Bit right now. We migrated over from BitMEX because there are huge system overloads. It's an easier user interface. It's a little cheaper. So actually we are trading, the whole team is trading now on Bybit. If you want to check it out, we have a free 110 deposit bonus. You can use the link. It will support the channel. You get the free bonus. If you don't want to use it, no problem. No hard feelings at all. Happy trading, guys, and be cautious. That's leverage trading. So always know what you're doing over there. There's also a tutorial how to set a stop loss. It will be popping up over there. So let's get straight into it. What we are talking about today is the 200-day moving average, but not only the 200-day moving average. We will add something important to it, and that's the Maya multiple. And the Maya multiple actually suggests or measures the distance between the price and the 200-day moving average. So to go back into the chart, whenever we crossed that line right here, the Maya multiple was 1 because the price equaled exactly the 200-day moving average. And as you can see here at this top out, we had the highest Maya multiple since a very long time, probably since we hit the low where we had a negative Maya multiple. So far, so good. What does that suggest about the markets? And Crypto Kia, shout out to him, also shout out to Hubul and to Trace Maya. He made a very nice picture out of the last few bull markets, and it will get more and more interesting as the time passes, guys. Check that out right now. So if we go into the charts, we can see that we bottomed out as the distance was the highest, and now it's getting interesting. Always, when we go above the 200-day moving average, we had the start of the bull market right there in 2012, right here in 2015, mid of 2015, and right here, hopefully, guys, in April, on the 1st of April 2019. And what's interesting for us right now, because we topped out temporarily at 13,900 something, is will we retrace even further, and what will happen afterwards? What we can see is that 2.5 for the Maya multiple is always a major correction point during bull markets. We can see that right here. We can see that especially right here in 2017, always at 2.5, we temporarily topped out at the 2.5 times 200-day moving average. And if we go back to the Maya multiple website, do we have it somewhere here? Yes. You can see that he is actually suggesting that when the Bitcoin price is below 2.4 times the 200-day moving average, that is in a very long term, guys, in a very long term, a good time to buy. We would actually say better go for below 1.7 or so if you have the chance to. And at the moment we are at around 2.09. But this is actually what he says, but we don't always have to agree to everything. 2.5 is already very bullish and kind of oversold, especially as you can see, we are topping out at these levels. But now very important. So if we are looking at this level here, we were able to see, and this picture is unfortunately like 5 days old. that he said a few days ago, before we topped out, that at 2.5x times the 200-day moving average, which will be around 13K, actually it was above 13K, we might top out. And that was exactly what happened. And now the question is obviously, where will we retrace to? Is the retracement already over? And very important, what is going to happen right now if the retracement is already over? So for that, we will check out this picture right here. And this gives us a clear indication, because going back into the history, we can see that after we hit the first correction, we were always going back into the bullish channel. You can see that right here. And also here, we were always going back into the bullish channel, which actually brings us to a Maya multiple of below 1.7, actually significantly below 1.7. So what we can see here is we went back here, we went back there, we went back there, and what the history tells us, and obviously it's not a 100% clear indication for the future, is that we should usually go back into the bullish channel, which is below 1.7 Maya multiple, so below 1.7 times 200-day moving average. So if that should happen, we go back into the charts, guys. It's easy as that. Sometimes it is easy as that. It's so nice. We can see that the price is obviously increasing heavily, since this is a lagging indicator, and going 200 days back would actually bring us exactly to that sharp decline right here. So this will be increasing within the next days. Starting in 5 days or so, the increase will be even higher. We can see that 1.7 of 5,500 would actually bring us to 9,100 or so. I have to calculate that very quickly. Apologies, guys. Times 1.7, yeah, 9,200, 9,350. We did not hit that yet. We hit yet 9,500. So we are actually very close to it. But if the price retraces a little bit more and this line here increases, then 9,300, 9,500, maybe forming a double bottom or so, would already put us at the 1.7 Maya multiple. But this is actually a very good scenario already. What we actually said yesterday in the last video, if you want to see that, where we said if we think the retracement has ended or not, we said that 8,500 is a very likely scenario, but we gave you a very important scenario why this was maybe already the bottom here. And if you want to see that, we don't want to drag here around too much, just go to our channel and check the video from yesterday. It was really interesting, got like 20,000 views. Check it out. That will be very interesting. But what we do right now is we want to exactly spot what might happen if we already bottomed out temporarily and what might happen in the next days. So the next picture is actually the most important one. If we go here into that amazing picture, we can see the overbought and the oversold territories. And we can see that that one exactly showed us where we had a low in the bear market, like here, like right there and right there. It shows us that the major corrections, especially the first major correction in each and every bull cycle, happens when we hit the upper side, the 2.5 times 200-day moving average of the bullish channel, of the bullish overextension at 2.5, as you can see it right here. And then we always go back into the bullish channel. So if the history repeats or if the history rhymes, we should still go to 1.7. And depending on how long we are hovering around between 11 and 13K, that could mean that the price won't be all too low, because the 200-day moving average is going higher and higher. But if we are retracing within the next days, that can mean that we actually still can go below 9,000. So what we will be doing is we will screen the market and we will check out when this major retracement comes, if it comes. And if it comes soon, the retracement will be higher. If it takes longer, the retracement will be not so crazy and the retracement might be only very, very small. So we will definitely look out for that. And what's the most important learning from that is that always when the first correction happened, that meant that we are already in the middle of the bull market and that the huge parabolic upspike is not even so far away. So what this picture tells us, and also this picture right here, is that exactly if this is really the first correction as we had it right here and right there, would lead us to a major parabolic spike within the next month. So this is already a very important learning, because many people are still talking about 2021, 2022. What this actually suggests to us is that the major up spike, you can see it, this was the first correction and this was the parabolic run. This was the first correction and this was the first parabolic run of that bull cycle. So if that's really the case, the best part is already ahead of us. Nevertheless, there might be a further correction, but the overall learning of that video is very, very bullish in the midterm. What do you think about the Maya multiple? Do you think that has some significance? Let us know in the comment section down below. We will try to answer each and every comment. That will be very interesting for us to know. And also smash up the like button if you got any value from that. We will give all the different resources down below. And do not forget, if you want to have a better trading experience, only in our opinion, than on BitMEX, and want to trade on leverage, we have a tutorial. It will be popping up right there on that side. And we have a $110 free deposit bonus for you for the Bybit exchange. Check it out if you want to support us. If you don't want to, no problem at all, guys. Check it out and trade with caution. Let us know what you think about that, guys. We actually think this is very significant. It's very easy, but easy sometimes wins the game. And as the last point of the episode, if you already have already ended the episode, it's your own fault, because we have a very important learning, guys. And now please listen carefully. We always look at the history, but please listen carefully. History doesn't dictate the future. That was Warren Buffett. We always love him because he is some kind of a Bitcoin basher. If past history was all that is needed to play the game of money, the richest people in the world would be librarians. The investor of today does not profit from yesterday's growth. So, of course, the past history rhymes with the future, but it is not a 100% clear indication. And the market is designed, especially in a bull market, to leave people behind. So always make sure that you have a holding portfolio and you are prepared. When the huge moonshot comes, the market already left behind a lot of people. So when we are saying that we have to go below 1.7, it actually does not mean that we will necessarily go below 1.7. That was only the history, guys. We can change the history and we can have a different future. Always be aware of that. Take it with a grain of salt. And that being said, guys, thank you so much for watching, and we will see each other at the next episode of MMCrypto. Smash up the like button. Watch our Bybit tutorial. It's coming up right there. And as always, guys, bye-bye.